We are following breaking news on Wall Street. Stocks closing after a brutal day. Red across the board. The Dow down more than 1,000 points. The Nasdaq down 500. The S&P also down. For perspective here, it was the worst day for the Dow and the S&P since 2022. Of course, many fear that the current status of the stock market could mean an economic slowdown nationwide, which could lead to a recession. Lee Waldman joins us live from New York to explain what this could all mean for you. Lee?
Simone, good to be with you. Fear surrounding Wall Street is at a 4-year high, according to SIBO's Volatility Index. Data shows that investors are spooked by a slew of data indicating that the U.S. economy could be experiencing a slowdown.
Panic at the stock exchange Monday. With markets around the world dipping sharply overnight, the Dow opened down more than 1,000 points, setting off alarm bells.
Uncertainty is our worst enemy, and panic is the ultimate uncertainty out there.
Investors appear anxious over the U.S. Federal Reserve's decision not to trim interest rates last week as it waits for inflation to fall further. But following Friday's disappointing July jobs report showing the U.S. unemployment rate ticking up to its highest level since October 2021, Fed Chair Jerome Powell's patience could be backfiring.
My guess is they're feeling a bit remorse that they didn't pull the trigger on that rate cut in July. That doesn't mean we necessarily will go into recession, but I think the financial markets do have it right.
Some traders are betting the U.S. central bank will be forced into a rare emergency rate cut, though some analysts say while this is possible, it may not be likely.
In all likelihood, the Fed wants to stick to its predetermined calendar.
The Fed still has a lot to consider before it slashes rates, according to many experts, and it's still too soon to tell if the economy is simply cooling as planned or headed for a deep freeze.
We've had some disappointing economic data that is worrisome. That's far from a calamity. It's far from giving us proof that the economy is in contraction mode, broadly speaking.
Now let's talk about the silver lining here. The rate cuts, they are coming in September. The analysts we spoke to suggested that we saw is the economy coming back into balance. The red hot job market, that wasn't sustainable, and the unemployment rate was in line with historic norms.
Okay.
Simone?
I appreciate that you look for the silver lining because this was just a bloodbath today on Wall Street. But look, I'm curious, for people watching at home, I think a lot of them are saying, what does this mean for me? And what does this mean for my wallet?
Yeah, and that's a question we had as well, and it's why we proposed that question to the Bankrate analysts. They said, first and foremost, even when the stock market looks as scary as it did today, it is so important not to act out of fear or out of panic. You need to take a rational approach when it comes to your finances, and you need to anticipate the possibility of the kind of pullback that we saw today. You need to run your own experiments and assess how much you can tolerate that risk or a downturn in the market.
I texted my mom earlier and I said, Mom, don't look at your 401k. It's all good. We're just going to roll with this. So Lee Waldman reporting for us tonight in New York. Thank you.